Everyone, welcome to this week's review of the NZSX50. And like we do every week is take a look at the performance as to how the main indices has been performing here on the New Zealand market. Before I jump across, remember that this is for education purposes only. No way is it intended to be personalised financial advice. If you're looking for your recommendations for your own situation, then you do need to go and talk to your own financial advisor. So let's take a look. Right, no surprises here. The market was down last week, so you can see that here by this little red candle. So we are definitely in a downtrend. Going back and looking at the highs, the last high that we've sort of had in this period was around here, which was December last year. That was sort of the high point, and that's where the market on that particular week closed at about 13,200. Okay, we're now down at 12,200. So we're just under 1,000 points off, or $1,000 in value, if you like, off where we were from that high. Now, that, just doing the numbers, that's roughly just under a 7% drop in value or price of the New Zealand main board. Now, it doesn't, in a technical term, it doesn't constitute that it's a bear market. A bear market, if you're looking for definite rules, if you like, is really any drop that is 20% or more from the most recent high. So we're only just under 7% at this stage. Clearly, we're in a downward market. The thing to remember too is that markets experience 5 or 6 falls of at least 10% a year, and quite often we don't tend to notice them. But at the moment, there is a lot of media noise and that around, obviously, what's happening in the US and the potential impacts on the tariffs that are being enforced or going to be enforced. Now, what drives markets? Surprises. Markets don't like surprises, and that's why the New Zealand market has been affected pretty much like most markets globally. The the Australian market has been affected, and if you watch the American market, wow, there's been some big drops, and just daily we've seen 6-7% on some of the indices in a day, which is huge. Those are huge drops. Now let's just take a look at our indicators. So one that I use just to get an overall direction of the trend is the 200 exponential moving average, and that just gives us an idea where the market is sort of heading. Now we are at this stage still above it. Which, hey, markets can come down to this moving average and hit it and rebound back up again. Whilst it's still above that 200 period moving average, we can't really classify it as a bear market. It could be a fairly short-term correction. I don't know. Only time is going to tell us that. But because it's still trading above that moving average, it's okay. We can't technically call it a bear market. We definitely do need to exercise caution though. So that's where things are at the moment. You can see when it has traded below that 200 period moving average, then there does tend to be more times or more periods that it tends to fall before you start to see a rebound. Now, I never want to try and pick when rebounds are going to happen. I'm just going back along to see where we last sort of saw it. And this has been, this period now is the last time we've seen it, the market trading below its 200 week moving average since around about January 2011. So that's a long time to be trading above it. Even during the COVID dip here, yes, in one week it did trade below it, but then it shot back above it again, and obviously the market rebounded very, very strongly. Now let's take this moving average and we will just modify it and put it to my normal 30, and we will also pop on the 15-week moving average as well. Now, I like to use both of these indicators because it really does give me a closer, more real-time snapshot as to what is happening in the market. And now I spoke about this last week, and you can definitely see it here. It's really, really more prevalent. You can see that my blue line, being my shorter period moving average, the 15-week, has definitely crossed through that 30-week moving average. So that, to me, definitely confirms that we are in a downward market. even though the long-term trend is potentially saying otherwise. I use these indicators when I'm deciding if I'm going to look at buying shares or not. Now, for me, and I spoke about this last week as well, is the 15-week is crossed below the 30. So that is a definite red flag that I would not be looking to enter any new positions now until it crosses back through. The other thing is basically for the last 7 weeks, we have been trading below both of those moving averages. Again, that's a negative sign for me. There's potentially more downward pressure. It's okay if shares trade above those moving averages and then maybe sell off and come back closer to them and then go again. And you can sort of see that happening through a lot of these periods. However, now because we're below these moving averages, what you quite often see, and in fact, what the last 7-8 weeks, we've actually had more red candles than green. So what that means is that if there's any sign of a rally, it's getting sold. People are selling. Okay, so that's something that you've got to be mindful of. And at the end of the day, no one knows where a bottom is going to be. And so I would rather wait until we get those moving averages crossed through, like it did through this period here, where we started to then get a reasonable run in our market. For me, I'm still holding long positions. So any position that I do own in the shares, I'm still holding those, definitely relying on my stop losses to take me out of the market, because I don't want my emotions to get in the way. I've already set a predetermined figure that I'm happy to sell a particular share at. And naturally, if that share keeps rising, which can happen, then I will keep moving my stops up. I've got a set formula that I use, and as that share rises, then I will look to increase my stop losses. And some shares do end up performing quite well, even though we are in a downward market. So I hope that's helped. I hope that's clarified a few things. Like I said, no new interest for me this week at all. Come back on Thursday though. We have had a few more questions come in regarding the gold investment. So I've done another video there which covers off a few more aspects in that of it. So take a look at that. And like always, if you want me to have a look at a share, or if there's something you'd like to learn about investing in the share market, drop me a comment. I read them all and I respond to every single one. And I'd love to be able to help you out. So until next week, take care.